Thanks to Phil and the team for the opportunity to present today. Unfortunately, we couldn't make it over to Noosa and enjoy some of the better weather. Stuck in so-called sunny Perth. It's been a tough couple of weeks for our school kids stuck inside with our weather. So at Blackstone, we're looking to produce a downstream nickel product for the lithium-ion battery with our Ta Qua nickel sulfide district in northern Vietnam. So it was a previously operating mine between 2013 and 2016. And you can see we've got some existing infrastructure, and we're going to turn on the existing infrastructure over the coming years, but move into these downstream products which are in high demand for the electric vehicle revolution. So at Blackstone, we give a rare opportunity to get direct exposure to these downstream products through our downstream nickel refining business, which we're looking to build in northern Vietnam. And we're looking to feed into this significant demand that's coming from the lithium-ion battery industry. So you can see here, 2021, it's around 259,000 tonnes of nickel required for the lithium-ion battery. That is going to 1.2 million tonnes. So we need to find, process and deliver another 1 million tonnes of class 1 nickel. And this is based on all of the gigafactories that are in the pipeline. So this is only in the next 5 to 10 years that we need to find 1 million tonnes and deliver into this high nickel cathode industry. So it's all driven by a movement towards high nickel cathode. And at Blackstone, we have a district scale nickel sulfide opportunity at the upstream business unit, but we're moving into this, what we see as a scalable and modular, globally significant nickel refining business. Just a quick corporate snapshot, well funded at the moment with $19 million at the last quarter, current market cap around $115 million. Board and management have a strong position of 14% of the company. Some very supportive shareholders out of Germany, Deutsche Balaton, EcoPro, which is the largest cathode manufacturer in the world. They're a major shareholder with 12%. And then we also have Fidelity, which is one of the largest institutional investors, and they're really focused on our ESG credentials and our movement towards a green nickel product. A board and management team with a long history of success. We've just introduced Miss Alison Gaines, who's a corporate governance expert and really shows our push towards highest level ESG compliance. Mr. Jung is the representative of EcoPro, and then Hamish Andrew founded the company and brought me in soon after. This flow of capital we're seeing from the lithium-ion batteries is unprecedented in the industry. We see a once in a lifetime or once in a generation opportunity to leverage off what is a global movement. Previous mining booms were driven by China, I suppose, growth, but this is a global movement, and we see something much bigger than we've seen in the industry before coming. So there's a movement of capital from those downstream players into this upstream opportunity. So we're looking to push from the upstream mine into the first stage of the lithium-ion battery, which is the chemical refining business, to produce the precursor for the NCM, which is the nickel, cobalt, manganese. 8-1-1 ratio of 8:1 nickel, cobalt to manganese. And you can see on the right of screen, we have EcoPro, our major partner, as the largest nickel cathode manufacturer in the world. A number of major players in this group from South Korea and Japan and China. So we're well positioned in northern Vietnam on the doorstep of all of these major players. Our downstream business is built on the fact that we can purchase nickel concentrate for around 75% payability or a discount to the nickel metal price. We can convert it into the NCM 811 product, which trades at about a 30 to 40% premium to the nickel metal price, so 140% payability. So we're basically doubling the value of the nickel by converting it into the NCM 811 chemical product for the lithium-ion battery. And we're going to do that with the hydro renewable power, which ensures that we have a green nickel product, which we believe will be the cleanest and greenest in the market. One of the major benefits of operating in Vietnam is the low operating cost environment. We have a labour costs, which is half of the cost of operating in China, China being one of the lower operating cost environments around. So well positioned with that low labour cost and that renewable hydropower as well. You can see VinFast is a local Vietnamese group. They're looking to build electric vehicles, electric scooters, and they're looking to a $60 billion IPO on the NASDAQ in the coming months. They are partnered with the major players, LG and Samsung. LG and Samsung have been in this northern Vietnam region for 10 to 20 years. They've sunk $20 billion already into this region. So this is an emerging hub for the lithium-ion battery. And over time, we believe the electric vehicle revolution will expand through this region as well. So a lot of nickel mines out there that are dirty. They're built on tired infrastructure that's for the stainless steel industry. We have an opportunity to build a hydrometallurgical process, use the renewable power, and make it tailored to fit the chemical industry and the green product, which we're aiming for a zero carbon footprint because of that renewable power in northern Vietnam. We'll just start with the upstream business, then we'll move to the downstream business. So there's two parts of the Blackstone investment opportunity. The upstream business is the existing mine which operated previously, and we're looking to turn that back on. We're systematically drilling the different targets. We have 25 different targets which we're using the modern geophysics and systematically moving through those. We've partnered with Trafigura, so as a feedstock partner to feed into our downstream business. We believe there's other opportunities to partner and acquire other upstream opportunities as well. So this is the nickel sulfide district. We have outcropping massive sulfide, undrilled and untested. We're just systematically moving through those 25 targets. The first 5 targets are all mines. So we're looking like we've got 2 open pits and 3 underground mines from the first 5 targets of the 25 targets. So we'll just continue to systematically drill through this belt, and we believe that we should be mining here for the next 10 to 20 years. The first opportunity was the Banfuk disseminated. We went and drilled that out, and we have in the order of 300,000 tonnes of nickel. So this is bulk open pit nickel sulfide, very similar to the Mount Keith nickel mine in Western Australia, which has been a very successful mine for BHP over many years now. We've put that first ore body into a scoping study. We've pushed that into the downstream products, and it has some very significant economics, around $1 billion NPV. The NPV to CapEx ratio is 2 times, internal rate of return of in the 40%, 45% IRR. So very strong economics on that first ore body. And that shows that the benefit of upgrading. So from that 75% payability to the 140% payability on the NCM product. We're also looking to the existing concentrator, which allows us to reduce the upfront capital at the upstream business level by using these smaller high-grade ore bodies. These are massive sulfide, high-grade, most likely underground mines. These are narrow underground mines, similar to what you would see in Kambalda, but we have very strong byproduct credits. So we have copper, cobalt, platinum, palladium, gold, rhodium. There's a full suite of PGEs as well. So very strong economics by using the existing concentrator, which is a 450,000 tonne per annum concentrator, well suited for these high-grade ore bodies. So this is basically what we're trying to achieve. We're taking the existing mining opportunity. We're looking at high-grade underground mines, similar to what the previous owners mined. You can see they depleted one of those high-grade underground mines, putting them through the existing concentrator. We're also looking at these big, large disseminated ore bodies. They'll need a second concentrator, around 4 million tonnes per annum. But most importantly, we're using the hydro renewable power, which drops the operating costs. We've also got those low labour costs. We're going to push it into the NCM product. So this is the nickel, cobalt, manganese. So we need to purchase some cobalt and manganese to create the NCM 811 precursor for the lithium-ion battery industry. And we can do that with all this existing infrastructure. So we have 2 of the largest hydro dams in Southeast Asia, right near the mine site. So the Son La and the Hua Bin hydro power plants, they have abundant excess capacity. We have the existing concentrator. The Haiphong port is where VinFast and LG are looking to build a $2 billion lithium-ion battery plant. and good rail and road infrastructure out to the mine site area. We'll now just focus on the downstream business. We're very close to announcing our pre-feasibility study and very proud to put the numbers into the market and show for the first time really as an industry what it looks like to take nickel concentrate all the way through to the NCM 811 product. So the pre-feasibility study, very close. We've said June, July, so we're any day now. So that will show these extremely, I suppose, robust economics. We're going to then push straight into the DFS and the pilot plant phase. Through that phase, we'll bring in our partners. So there's two types of partners. There's the feedstock partners like Trafigura. Then there's the downstream cathode manufacturers like EcoPro. We'll bring those partners through the pilot plant phase. At the completion of that pilot plant phase, we'll lock in offtakes, joint ventures, and then the final investment decision in the next 12 to 18 months, moving into the build phase, and then producing that NCM precursor product in 2024. This is our flow sheet. It's a pressure oxidation process. This is tried and tested technology used all through the mining industry, particularly in the refractory gold industry, but also in nickel sulfides. So we're floating off the high grades, and we're putting around 10% nickel concentrate into that autoclave. So that means a much smaller downstream business than a nickel laterite, around 1/10 of the capital costs of building a HPAL plant. So this is tried and tested technology, pushing it through into that NCM product. We're also looking at the MHP as an intermediate product. That's a strong intermediate product that gives us a strategic advantage as well. So we will have byproducts of copper cathode, and we're looking at leaching the residue, re-leaching the residue to produce the precious metals products as well. So yeah, this is the downstream business taking the concentrate into the NCM 811 product. This is very scalable. As long as we can get our hands on nickel sulfide, which we believe there's a number of nickel concentrators that we could turn on and feed into this business through partnerships and further acquisitions. This is scalable, it's modular. There's no reason why we couldn't take this to other parts of the world as long as we had those strong ESG credentials that we have in northern Vietnam. So just in summary, well positioned on the doorstep of all the major players being South Korea, Japan and China. We believe this is the best place in the world to producing downstream nickel products for the lithium-ion battery industry. We have very strong rail, road infrastructure, but most importantly, we have the hydro power, which drives very strong ESG credentials, a green nickel product, and the ability to then push it into those markets that are establishing in this region. So we have VinFast, a local conglomerate looking to build electric vehicles, with LG and Samsung also in country. Well positioned at Blackstone to leverage off the electric vehicle revolution. Thank you for your time.